Ladies and gentlemen, good day and welcome to 3BBLACKBIO DX Limited's Q4 FY26 results conference call hosted by Nuvama Wealth and Investment Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ranveer Singh from Nuvama Wealth and Investment Limited. Thank you, and over to you, Mr. Singh.
Yeah, thank you, Michelle. Thank you, Co-Res team. So on behalf of 3BBLACKBIO DX Limited, I extend a very warm welcome to all participants on the Q4 FY26 financial results discussion call. Today on our call, we have Mr. Dhirendra Dubey, he is Chairman and Managing Director, and Mr. Nikhil Dubey, which is a full-time Director. Before beginning this call, I would like to give a short disclaimer. This call may contain some of the forward-looking statements which are completely based upon the management's beliefs, opinions, and expectations as of today. These statements are not a guarantee of company's future performance and involve unforeseen risks and other uncertainties. With this, I would have to hand over the call to Mr. Dhirendra Dubey for his opening remarks. Over to you, sir.
Thank you, Ranveer. Good afternoon, everyone, and thank you for joining us. I am pleased to share that FY26 has been another strong year for the company. On a consolidated basis, we reported revenue of approximately 142 crore INR with a PAT of nearly 160 crores, reflecting healthy growth across our diagnostic business and strong contributions from TruPCR Europe and Co-Res Concept. Now talking about 3B India. This year, 3B India's molecular diagnostic business grew by approximately 10% with sales of 86.47 crore compared to 78.34 crores in previous year. This growth was slightly lower than our projections, largely due to exceptional flu and dengue/chikungunya demand seen in FY25 and the geopolitical tension in the Middle East, which impacted certain export markets. Our focus remains on increasing penetration in both government and private laboratory, strengthening our distribution network, expanding our international business, and improving customer retention through long-term reagent rental and institutional supply program. Looking ahead, we believe the Indian diagnostic business is well positioned for sustained growth, supported by increasing adoption of molecular testing, government healthcare initiative, and continued expansion in export market. Now talking about TruPCR Europe. Over the last 4 years, TruPCR Europe has delivered consistent growth with a CAGR of approximately 40%, successfully establishing our brand presence, strengthening distributor relationships, and supporting customers across multiple geographies. During FY26, the business continued its strong momentum, with sales reaching 1.75 million GBP, translating to 20.67 crore compared to 1.28 million or 13.9 crore. Now moving to Co-Res Concept, the Belgium company we acquired. Which we acquired in August last year, the business has delivered a meaningful contribution to both consolidated revenue and profitability. Consolidated sales for FY26 for 7 months is at 35.91 crore with a PAT of 8.76 crore, which is due to one-time event of the hat order being supplied in the profitable part of the year, for which we have consolidated post-acquisition, that is post 29th August. The next major focus is the ongoing US FDA submission process for selected AMR products. Successful clearance would provide access to a significantly large US diagnostic market and further expand Co-Res' global growth potential. Now talking about IVDR progress. One of the most important strategic initiatives for the group is our IVDR transition. As many of you are aware, the European regulatory landscape has changed significantly with the implementation of IVDR. We have appointed BSI as our notified body and have successfully completed the IVDR aligned QMS audits. technical documentation review for our key product families are progressing as planned. We believe successful IVDR transition will be a significant competitive advantage as customers increasingly look for suppliers with a clear and sustainable IVDR pathway. Now talking about the future outlook. Looking ahead, we remain optimistic about the growth prospect of the business and are targeting 15 to 20% growth in 26-27. Our focus remains on expanding our global presence by strengthening distributor partnerships, increasing our customer base in existing markets, and entering new geographies across Europe, Africa, Asia Pacific, Middle East, and Latin America. We are seeing encouraging traction in the international market and continue to enhance our visibility through global industry events and strategic partnerships. Overall, we believe the combination of strong Indian business, growing international operation through 2PCR Europe and Co-Res, expanding regulatory approval, and continued investment in innovation position as well for the next phase of sustained growth. Thank you, and now we will look for the questions. Look forward to the questions.
Thank you very much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask questions may please press star and one on their touchtone phone. If you wish to withdraw yourself from the question queue, you may press star and two. Participants are requested to use only handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may please press star and one to ask questions. The first question is from the line of Dharmil Shah from Dalmus Capital Management. Please go ahead.
Hi, thank you for the opportunity. So just wanted to clarify one thing, the export numbers that we share in PPT, 21.4 crores for FY26, that includes the exports we make from India to TruPCR, right?
Yeah.
Understood. So just
17.03 was last year, 3B exports, and this year it was 21.4. All the exports from 3B. So this includes exports done to TruPCR also.
Understood. So if we exclude this 21.4 crores from the overall standalone revenue, we roughly get around 75 crores, which I would usually assume would be from the domestic customers, right?
Yeah.
Understood. So when just comparing the standalone numbers from the previous year's quarters, the growth has really slowed down to, 2 to 3% YOY growth for last 2 quarters. Prior to that, growth rate was quite strong at 15-20% YOY. Yeah, adjusting for the chikungunya and dengue sales.
No, firstly, I would not like to go into put you on quarter and quarter. So if you see standalone last year versus this year, so there is a growth of around 7.some% on the standalone non-export revenue. And if we include the export growth of say 25% odd, we reach a growth of consolidated growth of 10%. So we started mainly with the Indian market way back in 2015. Then COVID came, then we started growing, and after 24, we are at a high base in terms of the molecular diagnostic market. And if you see what we have mentioned, that dengue and chikungunya and flu, they took almost 4.2 crores of revenue, which was in 24-25. If we include that, then our growth is domestic would have been say around 12.5 to 13%, and on a whole it would be around 15%.
Got it. So even if I exclude the chikungunya related one-time revenue from the base, excluding that, domestic business would have grown by around 10% or so. But even this number seems slightly lower given that, all the large diagnostic chains, they report test volume growth of roughly 10 to 11%. So just want to understand, what the underlying industry growth would be.
Actually, seasonality of flu, dengue, influenza is one very strong factor. Then we are into niche market, especially we are dominant into oncology. So to expect now that domestically we will grow at 20% only if there is a seasonal flu or a dengue chikungunya, then domestically we can grow at 20%. Otherwise, domestically we should grow around 15%, and internationally we should grow around 20 to 25%, and put together it would be between 15 to 20%.
Understood. Got it. And is there any, signs of increased competition you had mentioned in your previous calls as well? Do you see any increase?
From the previous call to now, the competition element remains the same. The small players, they sometimes underquote in some tenders, but those are very small time events. On the whole, the competition we are able to manage with our panels, multi-panel. So it is only the small tests like single tests like tuberculosis, HBV, HCV, where the competition comes fierce. But those are low-priced assays. We are mainly into higher panels, respiratory panel, meningitis panel. So there, the competition is lesser. And even oncology, if the competition comes, it is coming from the multinational. So price is not getting eroded. So now the competition element is more or less absorbed, and the growth that we are foreseeing for this year at around overall 15 to 20%. And I would prefer to talk overall because, exports will grow faster. Domestic will grow at a lower pace. Maybe 5 years down the line, even exports might slow down because we would have reached a level of this thing. And you must understand that we are into a niche area of the entire diagnostic industry. Molecular diagnostic is a very small percentage of the entire diagnostic. That's the reason why we command higher margin profitability. But overall, if we say Indian market is say around between 500 to 600 crores, we are now almost, you can say 15% approximately, which is a very high footprint. So competition also we are able to manage now.
Understood. So coming to Co-Res, what would be the annual revenue for FY26? I know, consolidation all started only from August, but just to get some sense.
You're talking about the last year?
Yeah, last year, FY26. No, not the 7 months, but the entire year.
Entire year it was around 50 crore because 4.7 million. So this year what we have done is we have made Co-Res to do their accounting up to 31st March. So 15 months their revenue was 57.65 crores.
Understood.
So from January to March 26.
Got it. And how confident are you on getting the US FDA approval for AMR product?
No. It's a process. So, we are pretty confident that we'll get it. Only thing is the time frame. So now we can say that we have been able to have the tie-ups with the labs who have to do the clinical trial. We are confident about the product, so the clinical trial also is a process. Then comes submission of documentation to FDA. They are reviewing it. So it's all those processes that we have already been facing for several years. So it is not something which cannot happen. It will definitely happen. Only thing is, it will take its own time. But whether it's going to finish off in 1 year, 1.5 years, or maybe drag little later, that's the only thing.
Understood. And even if we assume that we will get approvals in the next 2 years, what do you see the AMR portfolio contribution from US absolute in absolute?
US should contribute around 20% of the revenue. So initially it would be lower, but then it should reach 1 million, 1.5 million euros. So that is like 11 to 16 crores. So that will actually remove the gap of the hat business which they are having right now. And that's the thing. And we are trying to rationalize costing of the product. And the team is very high. So, the cost of employment is high. That's the reason the EBITDA is very on the lower side. But all these structural changes we are trying to do so that in next 1 year, 2 years, it actually comes to an EBITDA of, say, 10%, and then from there it can go up more.
Understood. And what would be the tax benefit in Co-Res? I mean, because previous years were loss-making, right now PBT is what would be flowing to PAT. So how longer would we have that tax benefit?
I think I want to start paying taxes tomorrow. So, if we make good profit. But I think there is a carry forward situation of almost 2-3 million. So for 3 years or 4 years, tax should not be an issue.
Got it. And just one last bookkeeping question. Suddenly the depreciation cost has increased to 3.9 crores in current quarter. And what was the reason for this spike?
No, because, if you have seen that Co-Res in the last quarter, on a consolidated basis, you are asking, no?
Yeah, on consolidated basis.
So consolidated, what happened is Co-Res has capitalized the R&D expenses, which we have mentioned in this thing also. And so the accounting policy says that, if you are capitalizing the R&D as per the Belgium law, so then you start amortizing it. So this year they amortized out of that 8 crores of R&D capitalization, almost 1/5, 20%, 1.6 crore was amortized this year. So every 5 years, that is the reason for the increase in depreciation. And of course, Co-Res itself is having depreciation, which is also got added in the Q4. So total depreciation from Co-Res is somewhere around 4 crores.
Understood. But even if I exclude that 1.6 crore of R&D amortization, even then, 3Q would also have full effect for Co-Res depreciation, right?
No, what is the full year depreciation?
No, not the full year, but in 3Q,
No. Q4 is, Co-Res must have done the R&D entry in the Q4. So, trying to analyze Q4 is very, very complex. If you see the full year, so what is the total depreciation is 5 crore 12 lakhs versus 1 crore 8 lakhs.
Yeah.
Okay. इसमें से 1.8 you remove of R&D, or rather we can say 4 crore is actually coming from Co-Res. So instead of 512, if we take 4 crore off, then 112 is the Indian versus 108 of last year. So 1.12 crore is India alone, including 2PCR Europe, which is low, versus 1.08 of last year. And Co-Res has added 4 crores.
Understood. And this R&D activity and amortization, this would be a recurring thing, right?
Hopefully it should be recurring, but probably it might not be on this higher scale of, say, 7 crores that they have done or 8 crores. It should be little lower, but it will continue.
Understood. And usually it's 20% amortization in a year.
Yeah.
Of the total. Understood.
Yeah.
Yeah. Thank you so much and best of luck. Yeah.
Thank you. The next question is from the line of Rajat Narula, from an individual investor. Please go ahead.
Hi, Dhirendraji. Thank you for organizing the call.
Yeah, hi.
So, Dhirendraji, my first question was on the guidance you mentioned, which was 15 to 20% growth. Is that revenue growth? Because I was specifically thinking about margins, and especially Q1 and Q2, because now we're going to be integrating the unprofitable quarters of Co-Res, which we didn't have in FY26. So how should we think about profitability this year?
No, so again, quarter on quarter is very difficult to this thing. For a full year basis, what we are saying is 15 to 20% growth on the revenue. And I think that the EBITDA margin or profitability will also grow at the same pace, because I'm not seeing very huge erosion in terms of any margin, for 3B, which is actually the main source. Co-Res Q1 should be little dragging, but then Q2, if they have the order of hat, also they don't book in the Q2, they just get advance. So Q1 and Q2, Co-Res will have a loss, but I would prefer to talk on a full year basis. Quarter on quarter is very difficult for us to this thing, because suddenly then in Q3 and Q4, with the Co-Res having the hat order, they will jump suddenly, So very difficult to explain that. But for a full year basis, 15-20% is growth for the revenue, and 15 to 20% should be the growth for EBITDA also.
Okay, that's great to hear. And just in terms of the integration with Co-Res, I think now in Q4, we're seeing the full extent of expenses come through, right? The employee cost has gone up, I think, 3 or 4x over last year, and other expenses have jumped. Is that, I think, is the Q4 the new baseline we should look at going forward, or Q4 is higher than what it will be quarter on quarter?
No, Q4 is actually keeping the employees, other expenses. Mostly, it's the real consolidation, because Q4 is having Co-Res fully there, TruPCR Europe also there, 3D is there. So that is actually the baseline.
Got it. Okay. My next question was on new products. I think in the last quarter, you had mentioned you all were working on a sample to answer system and slightly longer term POC products. So any update there? Are these still priorities, and any timeline when we'll be launching?
Sample to answer, we mentioned last time also that, we are doing an OEM, because developing a system will take a very long time. So we have the system and the validation is going on. The initial results are good. So we hope that probably in 1 or 2 quarters, we should start offering it, So that area of revenue, which is not coming, probably from Q3, we can say that, okay, yes, now sample to answer has been launched in 2-3 labs, and they started using it. So this year, by Q3 and Q4, we will have sample to answer installations, because the validation is showing positive signs. But all that has been accounted for in the 15-20%.
Got it. Last one on M&A. Any update there? I think now we have a huge cash balance of nearly, I think, 90 crores plus 150 crores investments, in nearly 250 crores. And I think last quarter you had mentioned we had a budget of around 140 crores, and you had maybe met some candidates in Dubai. So any update on those discussions?
There are few advanced discussions going on, but until anything happens, at the last moment things slip out because of valuation. European valuations are very high. Indian people are also now, talking about very high multiples. And when you talk about the grassroots reality, things are different. So when you go to buy a company, they talk about a multiple of 20, whereas normal M&As should be happening between 6 to 8 maximum. So there are 2 or 3 opportunities which we are looking into, and I think by this year end we should have something. The cash is there, of course. What you are saying is right, around 230 odd. and we are actively looking, and I will request you also to suggest something if it comes to your mind.
Definitely. Okay. Thank you, sir. Those are my questions.
Okay.
Thank you. You may please press star and one to ask questions. The next question is from the line of Kumar Saurabh from Scientific Investing. Please go ahead.
Hello, sir. My question is also around the cash. But I want to know, usually to expand, how much of CapEx amount is needed? Is it like 2 to 4 crore, 10 crore will be enough for next round of CapEx?
For M&A?
No, for expansion, sir. What I want to know is every year, my sense is every year we will be generating 40 crore plus of free cash flow, which means this problem of cash on the books will always come. So my primary question is, if that is the case, shouldn't we have a dedicated focus on M&A strategy, maybe by, having some team or some set of consultants around it? I mean, we need to have a structured approach towards M&A given the kind of free cash flow we generate?
So we have already appointed 3 or 4 consultants, sitting in France, UK, US. So the question is, if you get one good opportunity, I got an opportunity which was for 20 million. So it straight away will eat out to 40 crores. So when we are building up this reserve, it is making us capable of doing M&A, because if you have small money, you get companies which are very slow. Co-Res we got because of several reasons, because the earlier oral wanted to sell off and it was on a slight negative scenario. So, we could have negotiated a lower price. But when we look for companies who have a top line of 10 million, and even if they are EBITDA positive by 10%, the valuation they ask for is 10 to 12 million. So I hope that we are already having a very good strategy for M&A. We are searching across, and I think in next 1 or 2 years, what we have said that we will try to keep a reserve of 50 crore just as a habit. Rest all hopefully should be parked in an M&A scenario. For expansion, we don't need too much of capital because currently also we are utilizing around 50% of our capacity. So we are very well placed for meeting out any sudden spurge in demand. And if we have to increase capacity, it will not take more than 4-5 crores.
Great, sir. Nice to know. Just one more question, sir. Do we have any kind of minimal criteria or checklist criteria for the acquisition? Like Co-Res, we know when we acquired, it's a good deal, but it was not a PAT positive company. So are there any bare minimum criteria we have given to these consultants who are looking for acquisition?
Yeah. We have given something like a top line of up to 2 million minimum, and it's a growing sector, whether they are in EBITDA positive or slightly they can be turned around. That would be more interesting for valuations. We also try to increase our horizon. Instead of IVD industry, we are trying to look at left and right, So where diagnostic is a part, or molecular or genetics is a part, but it is not hardcore IVD. So that's the kind of guidance we have given to the consultants.
Okay, sir. And sir, coming to our total addressable market in India, as you say, this market is small niche market, 500-600 crores. But what is the size of market in Europe and USA, which we are targeting through the acquisition as well as through US FDA? And what is the market share you see in next 3-4 years we will be having in these countries?
No. So what happens is, if we talk about diagnostic industry, it's very complex. Number one, you have big machines which are called sample to answer. They have a area. Then we have got POCs where you do only 1 or 2 or 3 samples at one time. So these two are actually dominating the global market. In Indian market, I would say that 70% is coming from the open kit, what we are doing, and probably 35 is coming from the sample to answer or POC. So, and all this put together, it is growing at around 8 to 10%. So, if India, our addressable market is 500 to 600 crore, our addressable market globally would be maybe 1,000 crore, but the problem is that in US right now we're not present, which is the biggest market. Almost entire 50% of molecular diagnostic industry is dominated by US. But then it is a highly regulated market. You require FDA approvals, you require sample to answer, you require POCs. We are not there. Similarly, in European markets, we are there for an open kit market, not for the sample to answer, for the POC. So therefore, it is very difficult to figure out what is the total addressable market for 3B open kit. One thing is there that we are growing on the export front at a faster pace because we are present in some markets, but there is still a lot of markets where we are not present. So that is the kind of scenario, you know.
Got it, sir. And sir, my last question is, what is the, I'm not looking for exact number because we are in different types of kits and prices vary, but average, what is the price of the kits we sell in the market? And is it the end customer which bears the price in India, or is it hospital? How does it work? Who pays for it and how does it work?
So our average price, our selling price to the intermediary, a distributor, would be somewhere around 700 to 800. Average price, you know, some kits are like 300, some kits are 1500, 2000. And then the distributor will mark up 15%, 20%, and then sell it to the lab or the hospital. And the hospital will mark up probably a huge percentage because they have the manpower and other things. So that's the chain, you know. So we are selling, for example, at 700, 800. The hospital will be buying it at probably around 1000. And then they would be selling the test probably at 2000, 2500 or something.
Got it, sir. Thanks a lot, sir. Wish you all the best. I'll come back in the queue.
Thank you.
Thank you. Please press star and one to ask questions. The next question is from the line of Manjit Buaria from Samya Advisors LLP. Please go ahead.
Thank you for taking my question, sir. First, on the US FDA registrations which you are trying to do, I was curious how many of these products you are trying to register there are manufactured within US and how many of them are actually imported into US. That was my first question. And second, if you could throw some light, you know, for specifically just the products we are registering in US FDA right now, trying to register, what is the size of market for those products? Not the overall market, but just for those products. If you could just help me with these 2 points.
No, so Co-Res is going to register one of its products.
Okay.
So it's called Resist 5, which is probably contributing almost 30-35% of revenue for them. So it is one product, which is, you can see on our listing also, we call it Carba 5, Resist 5, which gives resistance of all carbapenemins drugs together. And the US market for rapid diagnostic for AMR should be around Co-Res billing rate, if you talk about, you know, it should be around maybe 100 crore, 10 million.
Okay.
So,
and the US market is addressed via imports, or are there players manufacturing locally?
I think mainly import. Maybe if there are one or two local, maybe. But there is another company in France which is the major exporter. So the US distributor would import it and sell it, who already have a FDA registration.
Got it, sir. And in the presentation, sir, where you had mentioned that US FDA will open a big opportunity in US market in FY 28. So this is specific to just one product, which is about 100 crores market size. Is that the way to read that?
Yes.
Oh, okay. Last question, sir, was, when I went through your balance sheet for FY 25, all our treasury cash, the excess free cash flow which we hold on balance sheet, I noticed there were some investments you were making into equity shares, different instruments, etc., and not everything was in liquid funds or money market funds. So I was just curious, what is your plan going ahead in terms of deployment of these treasury assets? Like, will it be between equity, debt, and some other, type of corporate bonds?
Say somewhere around 5 to 7% is into the equity mutual fund. Almost 30-35% is in the fixed deposit. 30-35% is in the treasury bonds, either direct or the mutual funds dealing in this treasury bond. And then we have got the AAA rated bonds of the corporates like Tata Capital and types. So 90% is into these, and 5 to 7% is what is in the equity.
And on the bond side, sir, the book is completely liquid. Can you liquidate it without any mark-to-market losses the next day if some acquisition comes your way?
No. So, mostly what happens is if an acquisition comes, we are in a position to understand, first you sign an LOI, then you start doing the due diligence. So we know that in 3 months at the most we will be needing the money. So the FDs are maturing, the bonds are maturing, and then when you want to sell those bonds also, there is an open market and you can sell it within 3-4 days to get liquidity easily.
Oh, got it, sir. Thank you so much.
Thanks.
Thank you. The next question is from the line of Mohammad Sufyan Lakdawala from Dinero Capsule. Please go ahead.
Hi, sir. Thank you for the opportunity. Am I audible?
Yeah.
Yes, you are.
Yes. Sorry if I'm repeating the question. I just need to understand the margins which we have seen this Q4. So going forward, is this Q4 margin sustainable, or the full year what we have done, the 40% EBITDA margin will be sustainable and use it for FY 27, 28? I'm just trying to understand the margin perspective.
No. So we always say about the full year. So when we are trying to say on the full year basis, the margin is, I think it is almost 60% gross margin if we remove the other income.
Okay.
So
then EBITDA margin is what?
EBITDA margin also is how much? EBITDA is like 61.84. Is it
EBITDA would be
other income?
40%, right?
No. 61.
On the consolidated.
Okay. You are taking the consolidated one.
Yeah.
Yeah. The consolidated is, how much is that?
For this in Q4, it was like 24%, and for FY 26, 40%.
Yeah, consolidated margin will definitely be similar to this because the Co-Res margin is very low. The EBITDA margin is around 10%, and TruPCR is around 15 to 20, and 3B is the one, which is high. So if you put all those together, then the margin you're talking on an annual basis, the same margin will continue.
The 40%, you are saying, yeah?
Yeah.
Okay, sir. Okay, and 15 to 20% growth, including Co-Res and other businesses on the consolidated expecting the growth.
Yeah.
Oh, okay, sir. So, and on this thing, on the cash, what you're saying, so you are looking for inorganic opportunities. So can we expect something to close in Q1 or Q2 something? Is there any, like is when discussion for 2-3?
For M&A?
Yeah.
It's very difficult to say this. We are trying, we are hopeful. But they say, until unless it has happened, you can't say. A lot of negotiation, due diligence, etc. going on,
Yeah.
This
Okay.
year,
Thank
definitely
you.
it should happen. But Q1, Q2,
Okay, in a year it should happen.
Yeah.
Okay. Thank you.
Thank you. Participants who wishes to ask questions may please press star and one now. The next question is from the line of Vivek Chaturvedi, an individual investor. Please go ahead.
Hi, sir. I just wanted to confirm a couple of things. Out of the total consolidated sales in FY 26 of 142 crores, around 35 crores is from Co-Res. Is that correct?
Yeah. Yeah.
So about 107 crores is the original 3BBLACKBIO, including the UK operations, and that we are saying we are expecting to grow about 15 to 20%.
Yeah.
So that 107 crores will come to about 125 odd crores, somewhere around that level. And this 35 crores of Co-Res, we are saying that the hat order will broadly remain similar, and the balance will grow at about what, 15-20%?
देखिए वो it's all, if we try to do it like this, first of all, this 37 odd crore is only for 7 months. Number one. So
Correct.
what we are saying is that this 35.91 will become somewhere around 50 plus minus. It could be 51, 52.
Correct.
And 3B and Europe, TruPCR Europe, that should be somewhere around 112 or something, 30, 116, 115. So 115 plus 52. So how much is that? Divided by current year. So because 7 months is taken, so it won't be a good comparison. Because 7 months and suddenly you are taking 12 months.
And I'm not saying that. I am saying that out of 142 crores of the top line which has been booked in FY 26, we are saying 35 crores is for the 7 months of Co-Res. Is that correct?
Yeah.
So 107 crores is our full 12 months original 3BBLACKBIO revenue, which we are expecting to grow at 15 to 20% in FY 27.
Yes.
So which will come to somewhere around 125 odd crores roughly.
Yeah, 124 or something.
Something, right, sir? Somewhere around 125 crores. And this original 50 crores, okay, will also grow a little bit. If you are saying if you had taken the full 12 months, it would have been 50 crores. And we are expecting the hat order to remain broadly similar and the rest of the business to grow at some 15-20% for Co-Res also.
This
Right? So that 30 crores
will become 52 crores.
36 crores will become 52 crores. So broadly, we will be somewhere in the range of 175-180 crores of top line for FY 27, all businesses put together.
Yes.
Right, sir? And you are saying that on that 175-180 odd crores of top line, not including the other income, what we are predicting or we are thinking we should arrive at is around 40-42% of operating margin for the full year.
देखिए मैं इतना hypothetical तो नहीं जाऊंगा. I would say that Co-Res will be EBITDA flat. Number one, we have also claimed this, that Co-Res will be slightly EBITDA positive. So let's remove Co-Res in terms of EBITDA calculation. So now if we talk about the EBITDA that 3B should get, should be how much? Without the other income.
Without the other income, standalone this year, we've done 55% EBITDA margin. The standalone business, 97 crores gives us 53 crores of operating profit, which is 55% EBITDA margin, which is what we've done last year also. 55% in FY 25 also. So I am assuming that profitability will broadly remain similar in FY 27 also.
So if we remove Co-Res, and we take the profitable margin of TruPCR Europe and 3B. What is the slide? Show the slide, no? Diagnostic slide. diagnostic side EBITDA margin. Yeah, slide. Yeah. So if we see the slide of MDX business financial, slide number 60, the EBITDA was 82.19, which included Co-Res EBITDA of 13, because it was
Correct.
because of, yeah. So
it came to 69 on a top line of roughly about 95 crores.
but calculate बताओ. So 3B and if you remove Co-Res, it is 60. How, what, EBITDA or what? No. 69.22 is the EBITDA of TruPCR Europe and 3B.
Correct.
So this should grow by 15%.
Correct. So 69 should grow by 15%, which will give us about 79 odd crores.
Yeah.
And we will do yes, without other income.
Yeah.
And we are doing roughly total top line including chorus of 175. So we should be arriving somewhere around 45% blended EBITDA margin excluding other income in FY27.
Hopefully.
Okay. So that is what I wanted to understand. And the depreciation, sir, how much would the depreciation be for the full year, including Chorus and 3B original business for FY27 roughly?
Roughly, I think it would be similar to 5 crores what we have done for last year. Maybe between 4.5, somewhere around that.
Okay, so 4.5 to 5 crores is roughly where the depreciation for all businesses put together for the full year would be, sir? Because in this year itself, in this quarter itself, we booked almost 4 crores of depreciation. So
No.
Is it that?
Will be, yeah. That quarter was because the year end they
Understood.
provided.
Understood.
Yeah.
Okay, so roughly we are saying,
yeah.
So excluding other income, roughly we'll be at around 75 crores of profitability, and whatever other income we basically generate. That plus 75 crores will give us roughly somewhere close to our PBT expected number for the full business.
नहीं मेरे को तो समझ में नहीं आ रहा है. You are trying to do so much arithmetic here. What we are
No.
What is happening is, you see, we came to a figure of the 5 crore depreciation will remain. Before that, we came to how much?
69 crores.
We are talking about growth figures for which we know that 15 to 20% we should grow in terms of 3B as a whole. Chorus will be around 5 million or 50 crores with EBITDA flat. And we will maintain the similar margin profile that we have done last time. So now if we put it into the system, we can come.
Yes, sir. Understood, sir.
Okay.
We are on the same. Thank you so much.
Yeah. Okay.
Thank you. The next question is from the line of Ranveer Singh from Nuvama Wealth and Investment Limited. Please go ahead.
Yeah, thank you for taking my question. I think most of things has already been clarified.
Yeah.
But there is a few things, I think related to Chorus. So in Chorus this time, if we exclude that hat portion of it, and I think initially in 2024, it was 6 million contract, right? Euro 6 million was the total contract, right?
Yeah.
And of that, how much has already been executed?
So first year 2.1 was executed, then 1.35 was executed.
Okay. So roughly,
so out of 6, 2.1 and 1.35. That is 2.35 has been
total?
executed. Yeah, almost 2.6 has been executed.
Okay.
So 2.4 is remaining.
And this 2.4 has to come through FY28.
4 years, yes.
4 years, from 24 to 4 years was the content. Okay. But timing, we do not know that when that will come.
No,
right?
it is every year it has to be there. But the problem is with Congo, it is specific for Congo. So now Ebola is there, so we don't know how much it will delay or affect it, So around 1.35 approximately for this year and remaining for next year. That should happen.
Okay. And this time we had a EBITDA positive, but again we are guiding that this may be the EBITDA.
Yeah.
So what makes the reason?
No, because we have consolidated only the profitable part,
Okay.
So if we take the Q1 and Q2, which was the loss making for them.
Okay.
So then the whole year they are just at a slight EBITDA loss.
Mm-hmm. No, so for next 2-3 years, now we have certification also in Europe. So what is the trajectory here in Co-Res? What kind of...
So what we are expecting, like we have written in the slide, that Co-Res will become slightly EBITDA positive.
In FY27?
Not 27. Yeah, maybe in 27 also, this year also, it could be slightly EBITDA positive. And from next year onward, we are trying to target, say, between 5 to 10% EBITDA positivity.
Okay, so in next 2-3 years, can we expect some 10% kind of EBITDA margin at least?
10% is what we are expecting in 27-28.
Okay. And the reason you gave that certain part of business is facing competition from China, so the growth would be there.
Yeah.
So what is the outlook? This is a temporary transitory or this is going to continue?
No, because that is a small percentage, it is 23% of the remaining sale is coming from these products. So the main product AMR, which is growing fast, that will try to cover up. So this degrowth or competitive market will remain very small percentage.
Yeah, so 23 is still not so small, it's roughly 1/4 of.
No, I know that. But what is happening is that is a fact that Chinese companies are giving very low rates for the respiratory and entero products. So AMR is where the company can grow and have respectable margin, So had this Chinese competition not been there, then there would have been a growth and EBITDA positivity. So what we can say is that this year we should be at around 5 billion top line and slight EBITDA positive. Next year we should be growing at 10% top line and have 5 to 7% EBITDA positivity. And next year onwards, that is the third year, we should be at 6 billion and 10% EBITDA. That's the goal.
Okay. Fine. And in India side business, that's there in UK subsidiary, there, have you seen there also some kind of competition coming in the existing market where you have been selling molecular diagnostics?
Yeah. We keep facing competition, but we try to adjust ourselves, We offer different products. So in TruPCR Europe also we face competition, but we are able to manage it. Like we are managing in India.
Mm-hmm. And of late, I have seen multiple players are now coming up in the market in India also in your space. So what is your understanding or what is your feel how the competition is going to step up in next 2-3 years or maybe 4-5 years? If you could just give some sense what is going there.
Actually, companies are coming and the small companies, they don't make margins, so then they try to withdraw from the market. So I think whatever is the current status, more or less similar kind of mix should remain. We should continue to dominate between 15% plus minus of the market. Market will continue to grow at 8 to 10%. There will be small players who are there. Some will withdraw, some will exist. Some European companies which are there, they will have little lower presence because they are always on a higher margin side, which we are easily able to compete. So next 2-3 years, I think similar sort of a market situation will remain. It is not that suddenly China will be glutting the market or something in India.
Yeah, so that was a fear actually, not only in India, even the export market also, like you faced.
Even in export market, because
Co-Res.
now with the IVDR, there will be some barrier. So, in the export market also, probably it won't be, what happens is China goes to products which are like high volume. So respiratory rapid test, that's a very high volume test. So that is where is the competition. They don't come into AMR, panels, oncology tests, which we are present.
Okay. Okay, nice. I think that was all from my side, and all the best. So moderator, you can take it.
Thank you. Thank you, sir. Ladies and gentlemen, that was the last question. I would now like to hand the conference over to the management for closing comments. Thank you, and over to you, sir.
No, thank you very much for all the investors who have joined. And I think the guidance what we have given is what holds true, that we will continue to grow at 15 to 20% this year with extensive efforts, and our margin profile also will remain similar. And Co-Res will come with 5 million or around 50% of top line, but the EBITDA will be literally a sort of, slightly EBITDA positive. So this gives the entire business picture, The growth of 15-20% is what is we are trying to achieve, and let's look forward to it. And next earning call we will have now in the half year. So we'll do only 2 earning calls every year. Thank you very much.
Thank you, members of the management. Ladies and gentlemen, on behalf of Nuvama Wealth and Investment Limited, that concludes this conference. We thank you for joining us, and you may now disconnect your lines. Thank you.